This podcast is general in nature and hasn't taken your circumstances into account. It's important you consider your personal circumstances and speak to a financial advisor before deciding what's right for you. Any general tax information provided is provided as a guide only.
Hi everyone, welcome to another episode of Simplifying Investing. Today we have a special podcast for you. Ravi Sharma is going to be joining us. He is the founder of Search Properties Buyers Agency. And we also have Sean O'Malley, who is a group executive at AMP Bank. We're going to be talking about some of the changing dynamics in the Australian housing market, the trends in the population, and how lenders have had to respond by innovative products to keep up with these changing trends. So Ravi, can you tell us a bit about yourself? How did you get into the buyers agency market?
So I guess the journey starts in 2019. At the time, I was in a different space altogether. I was in the entertainment space, and I always knew I wanted to get into real estate. So I was always investing in real estate, building the portfolio. And then I was like, okay, I've got to make a transition because the entertainment business for me was like, I'm going to settle down one day. I'm not going to be in my early 20s forever. And so I thought real estate, super passionate about it. A lot of people, a lot of friends were asking me about how to get into it, how to build the portfolio. So I ended up getting my license, and then 2020 kicks in and obviously everything shuts down. So everyone's sitting at home. And I decide, okay, I'm going to set up a YouTube channel and make videos about finance and property and hope that people want to listen.
And you had a background in finance?
So I had done mortgage broking and conveyancing,
Yep.
But real estate in terms of actual buying property was the core of what I was passionate about. And so I was covering off a lot of those things on the channel, and I think I had less than 50 people for a while. And then obviously things became really relevant, like inflation and interest rates, and everyone's like, oh, who's this guy talking about real estate? And I just had the normal, black t-shirt look, whereas everyone else at the time was, suit and tie. And I think people related to it. So since then, so it's been about 5 years, and I've been running Search Property now. So it's been good fun.
So when you first started investing in property, did you find it hard in the Australian market? As a young person, we often hear that housing affordability is such a challenge. How did you get into the market knowing some of the affordability challenges that are out there for a first home buyer?
Yeah, so I knew this, I bought my first property when I was 21. And so we're talking
And
now,
how did you do that?
Well, for me, I knew during uni, I needed to save as much money as I could. I was living at home, so I was grateful for that. But I always knew that for me to get into Sydney, and I was born here, so for me to get into Sydney, I knew that I would destroy my entire borrowing capacity. I would have no other options. And yes, it was known as blue chip, so everything goes up, but people were buying houses and I could only afford a unit at the time. And so I decided, instead of me purchasing locally, why don't I go regionally and see what else is out there, affordable markets. And I think I purchased my first property for about 200 to 220K. It was the 3-bedroom brick house. And, it's always that thing where you go, I wish I bought more, but that was all I could afford at the time. So I knew that my options were limited if I wanted to get into the market, but I just wanted to get in as soon as possible just to start getting time in the market.
So do you think that those opportunities still exist now, especially for first home buyers, given that home price growth since even 2019, 2020 has been quite phenomenal?
Yeah, look, I don't think we're finding 200K properties anymore. But when it comes to how much we're earning versus how much we can afford now, it's obviously out of whack to a certain extent in major capital cities like Sydney. But I still think there's, affordable options out there. There's still, duplexes, there's still houses in regional areas that you can purchase for 400, 500K. And so a lot of the headlines that do come out suggest the only way you can get into the property market is you got to afford a 700, 800K property. And, it's very difficult to get into the market, especially as a young person like that. So I think if people, broaden their horizon and look at other markets, I think there are still opportunities, but they're not as many as there were before.
Yeah. And that the opportunity to get into the market may start to deteriorate over time if we continue to see home price growth being quite high, right?
Oh, 100%. I always see these incentives that come out with, the governments, whoever it is.
The first home buyer grants.
Correct.
Yeah.
And what, the initial knee-jerk reaction is, oh my God, this is great for housing affordability. But when you actually play it out, and you would know this, is it sort of plays out with higher prices, which means you're now screwed over on the front end where you can't save a deposit fast enough, and the property prices move even faster than you can save.
It usually only benefits those that can access that at very early stages before the acceleration home prices goes.
Yeah, correct. Which is unfortunate for so many people because it looks like a great idea, but if you're 6 months away, everyone else that can get into the market now are taking advantage of schemes like that and incentives, but they're left behind.
So when you're looking at the housing market right now, you're helping people to get into the market. What are the sort of trends that you're seeing across the spectrum? Because even nationally, it's quite a mixed picture across capital cities, across regions, first home buyers, middle-aged households, and then retirees or the pre-retirees. So what are the sort of trends that you're seeing across the different groups?
I think we've started to see a lot more, people in their 50s and 60s start utilizing things like self-managed super funds. So that's definitely been a trend over the last 18 months.
Is that because of favourable taxation for housing?
Yeah, correct. And I think it's also with the interest rates where they're at or where they have been, a lot of people have been capped out when it comes to their borrowing capacity. So under their self-managed super fund, they've discovered they can actually still buy real estate, and it's totally different with the mechanics of how they can borrow when it comes to a bank or a broker. And so I've started to see that trend play out really, it's emphasized over the last 18 months. And then for younger people, it's just looking at all their options. I think information now, comes across so much faster than ever before. And I think as a result of that, people are now, looking at opportunities outside of just their backyard. So they're open to, hey, maybe I should rent vest rather than I just need to buy anything right now because I've got a FOMO and everyone's telling me I just need to buy a unit and that's it. I think people are getting smarter and they're realizing, okay, I don't need to go down the traditional route. I can probably rent vest and then come back into the market in say 5 years' time.
So the environment that we're in today in housing looks quite different to even 20, 30, and particularly 50 years ago because of affordability challenges, but also I suppose the different taxation treatments that you can get if you're a pre-retiree. So do you think that the housing industry in terms of brokers, buyers, agents, banks, do you think that there's been the need for more innovation to keep up with some of these changing trends?
100%. You can't expect that, our demographics changing, the property market's changing, and then you've got banking products or people involved in that industry are not going to change. So we've seen the rise of buyers agents over the last 5 to 10 years. We've started to see a lot more people understand what a broker is and going to brokerages rather than going direct to the banks. And then we're seeing, innovative products that are coming out from banks as well that are now supporting those changes when it comes to the demographic, which I think is a no-brainer and it needs to happen.
So why use a broker or a buyer's agent rather than just going direct yourself?
I think one of the biggest things is there's probably too much information nowadays. And so if you're a normal individual that works a 9-to-5 job, by the time you get home, you got to cook dinner and maybe you've got kids, and by the time you're actually focusing on getting your investing right, 1 week turns into 1 month, becomes 6 months. And so what people are now realizing is maybe I just outsource the entire thing when it comes to research for what home loan is going to suit me for my situation, as well as what type of property should I be investing in and do the numbers make sense. So I think people have a lot less time, and the time that they do have, they've realized maybe I want to spend it on things I'm passionate about and I'm really good at. And maybe I just want to spend it with family and friends rather than focusing on the boring stuff. To some people, us, we think it's actually very interesting. But for a lot of people, they don't like that sort of stuff.
And it's overwhelming information too, right?
Definitely.
So AMP Bank has recently launched a 10-year interest-only loan. I saw you on the morning show talking about the product. What are some of your thoughts about the new innovation that's come out of AMP Bank?
Yeah, I'm always a big fan when, there's change that comes in, especially when it really suits the demographic that we're in. So one of the things that we've sort of, pondered upon or spoken about is, aging population, things are changing, all the assets are held by certain demographics and certain age groups. And I think we just need to come up with solutions that help those people get the most out of life. A big thing that we've seen is, people that contact us, they might be in their 50s and 60s where they've got their one property. And now they're thinking, I had so much choice, but realistically, you don't really have that much choice. And so now when you have things like this come out where they can hold on to their property for much longer, realize some of that equity. And now it's not just thinking about themselves. They've got to think about the future generation, whether it's kids or grandkids. And I think that's where having a product like that means you can hold on to an asset for longer, which means I can pass on something to my kids and get them set up as well, which is really exciting.
So do you see that pre-retiree market as using the product to invest again into the market, or to use that when they're refinancing?
I think it could be a mix, but I think, and this is just my opinion, I guess, is I think a lot of people are going to be able to now not have to let go of that property because interest rates are where they're at. So you got high principal and interest repayments. I probably can't go back and, try and get a refinance, get some equity out, and maybe there's less flexibility. Whereas with something like this, you can start preparing ahead 10, 15 years down the track. And if I can get myself a favorable repayment scheme, if it's interest only, I get to now hold on to that for a lot longer. And it means I've got flexibility and choice. Whereas before, you're probably capping out at sort of 5 years interest only. And, for a lot of people, that's going to be in the difference between them working and then they're not working.
Sean, have we seen some feedback from maybe some of our brokers or even some of our customers about utilising this product in the way that Ravi is describing?
Yeah, absolutely. And, I think Ravi's explanation about why a buyer's agents or why a broker is, we're absolutely aligned to. It's complex. There's a lot of information and at times it's hard to understand. So we absolutely think that, it's a really important role that buyer's agents and brokers play in this market. Yeah, the feedback that we've had is all about actually we need some innovation. The feedback that our brokers, the brokers we've been talking to, say to us is actually we need some innovation. We need banks to lean in on the challenges that we face. And, in Australia, we face a couple of really large challenges. We face the challenge of affordability, but we also face the reality that there's a lot of wealth that is tied up in property and people who are asset rich but cash poor and, aren't living a great retirement or are worried about what their retirement's going to look like in that pre-retirement phase. So we're getting a lot of feedback about that, more feedback, in the last 5 years than I've ever seen in my 30 years of banking. And so a lot of feedback about actually banks need to think about this differently. The way we've thought about the best form of debt is to pay it off as quickly as you can. Maybe that isn't the right answer for everyone. And so this innovation from us was all predicated on that. This isn't a solution that's going to be right for everyone, but we think it's a solution that's going to help some customers. We think it's definitely applicable for pre-retirees and maybe retirees, but also for us, it's a sign we need to be innovative. The types of products and the way of thinking about debt that have held us in good stead for the last 20, 30, 40 years is not what we need in the environment we're operating in today. We know that affordability in Australia is a real challenge, but equally we know that there's a whole heap of wealth that's tied up in property as an asset class. And so we think there's a role banks can play, and that's what we're really leaning in on.
I mean, it's interesting because usually when you think about the typical baby boomer type of scenario or even a pre-retiree, well, most young people will say, oh, you shouldn't worry about them. They've got so much money. They're so wealthy. But it is all tied up because you can't eat your house. You can't sell a portion of your house to go fund a holiday or something like that. So unless you realize that asset sale, yes, maybe the home might have gone up 5-6 times over multiple decades, but you can't actually utilize that wealth. So how important is access to cash flow and capital from a pre-retiree point of view?
Yeah, so the research that we've done and that we've seen, both anecdotal but also research, has shown it's really important because to your point, you can't eat your house is absolutely right. So people, living not the best retirement that they could because of that challenge. And so it's very important. And, cash flow is essential for whatever reason that might be. Ravi mentioned, it might be about building for further retirement. It might be a more immediate use case where actually you want to help your kids or you want to help your grandkids, or it might be, that you actually want to go on a holiday and enjoy retirement. So various use cases, and cash flow, cash flow is the biggest part of that. Your ability to do that and your ability to have choice is all dictated by your cash flow. So, this is a solution. We're certainly thinking about others. And so there are other solutions on our minds that we'd be bringing to market as well, because it is how do we help people manage their cash flow better?
And what about trends going the other way for first home buyers in the market that you're seeing? Have you been seeing any changes, especially now that we're firmly in a cutting cycle? Reserve banks come out a bit more dovish this week, so talking about potentially a few more rate cuts. Do you think that this is going to spur some further movement in home prices?
Yeah, I definitely think so. I think there's markets where they've already got some strong momentum, and I think that just continues. But then you've got, areas like Sydney and Melbourne that traditionally have been really sensitive to price cuts or rate cuts. And so I think that we can start to see a lot more momentum being built up in those markets too. But it's interesting, we're talking about pre-retirees and they're liking this element of cash flow. We're seeing the same thing with younger people where they're like, I want to get into the market, and if my only option is interest plus principal loan, It means I'm limited by me living in the present, being able to afford to do things and still build wealth in real estate. Whereas if I can go with an interest-only option, I've got more choice and I've got flexibility. So I think it works for both sets of markets. And I think it's going to be interesting where, I think a piece of innovation like this starts getting to other people to start thinking outside of the box because we're not in the same environment we were 30 years ago.
So your view for young people is basically that the dream of owning your own home is still alive.
I'm definitely an optimist. And I know that when I started, I purchased my first property, now it's 11, 12 years ago. And I remember at that time, I was in a position where I couldn't afford to buy in Sydney. And everyone told me, look at the news articles, look at the news headlines. You can never buy real estate here. And if you buy in real estate in Sydney, you'll have the one property and you'll be sorted. So just buy it as soon as possible. A lot of the same messaging is now in, real estate across, younger groups. You see them on Facebook groups and everything in between. So I don't think the messaging's changed. I think it is difficult, more difficult now than it was back then. We also have so much more flexibility. There's more lenders on panels now. There's brokers that have good information. You've got people out there trying to do the right thing with more information. So I definitely think that there's different ways around how you get to the end goal. So it's not a one size fit all.
And can you still get rich buying homes? That's sort of been the big, the biggest driver of wealth for baby boomers has been the accumulation of home prices over multiple decades, and that period of continued home price growth is unlikely to happen again at that same pace for such a long period of time, because obviously we're at more of an affordability constraint right now, and we saw periods where home price growth was running well above incomes for a long time, and it is hard to replicate that period, especially as interest rates have gone higher relative to the 10 years before the pandemic. So can you still get rich buying homes?
Well, every time we do,
or build wealth, I guess.
Yeah, I guess whenever we talk about strategy long term, we always sandbag it and say, we're probably seeing 7 to 10%. We should do our numbers on probably 5%. And I think that's more to do with that affordability. We're probably not going to see the same levels of growth that we've seen before. But in saying that, can we still build a lot of wealth in real estate? Yeah, definitely. And I think that comes down to, picking the right markets, knowing your own personal, situation, having a good strategy, having a good budgeting plan. They're all real basics when it comes to personal finance, but it's very important. And I think longer term, as a modern day investor, you're looking at all other options. We've got the internet now that we didn't have 30 years ago where we could build businesses online. We work in most cases hybrid work situations, so we're not in the office 5 days a week. So people have more time. So it means maybe real estate isn't going to be the only pillar for people's wealth. I think it becomes a strong pillar, but it's how modern day investors can start looking outside of that and start building wealth, in conjunction with something like real estate.
And maybe if I just add, I think a really important part there, I've talked about balance, and I fully subscribe to that. I also think actually, and we know, Deanna, a lot of the work that we've done about our research shows actually your retirement is enhanced if you own a property. And so whether that's about accumulating wealth or preparing for your very best retirement, we know that actually there's a really strong correlation between owning your own property and the retirement that you'll enjoy. And so that's the other, I think important aspect here for us to think about.
Yeah, definitely.
I thought it was really interesting that you said a point about, we've been told before, pay down your home as fast as possible. And that's sort of been a source of financial advice, I suppose, or one form of that. Do you think that that's the way forward from here?
I don't think so. I think, we've grown up with some of these things that people tell us. Like my parents told me the same thing, pay down your debt, it's bad, all debt is bad. But I think it's a tool of leverage. And I think if people use it the right way, just like you use the car to get to work faster, I think it's a similar tool. So if we can use that leverage tool the right way for the right reasons, I think people can, go out and live their best lives. But again, you've got to use it within the confines of your strategy and having the emergency funds and doing it the right way.
Yeah, of course. It's going to be different for everyone. We don't know everyone's financial circumstances. But when you think about broadening out a bit, I guess, into the risks that we may face in the housing market, if I was just to think about my own sort of downside scenario risks, and we get asked to do a lot of modelling analysis. So what are the sort of downside risks to the housing market that I can see? Well, a big increase to the unemployment rate would be one. People would be potentially forced to sell their homes. You get a bit of a fire sale type of environment in the housing market, global shock, which would lead to a downturn in the economy and a downturn in the housing market. When you're thinking about the outlook for housing, what are some of the biggest risks that you're both worried about?
Yeah, I think you're right about unemployment. And I think, whilst we've been in a period where house prices have continued to appreciate, property doesn't only go up. There will be periods of time where property goes down. Now, we haven't really experienced that in Australia, certainly not to any degree, but it's an asset class in which property prices could go down. And so, what could be drivers? That's certainly unemployment. Certainly, if we're in periods of high inflation that led to high interest rates, we are seeing probably we're at the other side of that now, clearly, which is fantastic news. But I think you've always got to think about that. And you've always got to think about the right leverage, the right level of leverage, not overcommitting. Obviously, loss of employment, sickness, ensuring that you're protected against that. Any form of loss of income is at an individual level clearly very, very worrying. I think at a macro level, it's definitely about economic performance and unemployment. And at a macro level, also, we need to slightly related, but we do have a supply issue here. And so whilst a lot of what we're talking about is about ways to access market and ways to solve some of the challenges of affordability, we also know there's a supply issue in Australia, and so there's a lot of action going on about that. I personally don't think there's enough action on the supply side. I think we need to see more action on the supply side, and government certainly is governments, federal and state, need to play a role there. But we do have a supply challenge we've got to solve as well.
Yeah, I think the only part I'll add is that supply side is traditionally when we've seen pullbacks in the market in Australia, it's a combination of things, but supply has always been a key concern. So if we've got an undersupply, but you still have interest rates going up, which we've seen in the last couple of years, we still see these markets go higher. But I think a lot of those challenges, they're all very valid points.
Tax changes can also impact markets. So like in Victoria, some of the tax changes there have actually led to a fall in Melbourne. Property prices in Victoria too. Melbourne at one stage was the second cheapest capital city in Australia.
Yeah, it's wild because I think I remember...
It's a good time to buy. Not that that's financial advice.
Well, it's interesting because in Queensland, I think they had an idea that they were going to introduce these land taxes. And it was like a one-day thing. And I remember there was people, literally like agents calling us saying, hey, there's a few people now interested in selling property. And again, it never passed. And so people, obviously knee-jerk reaction and got out. But in Victoria, it did pass. And we've seen so much slowdown, a slowdown in that economy there. House prices as well sort of came down as well. But the other point you make is very valid, is taxation. And right now we've got large amounts of demand. People want to live in Australia. But if you suddenly jack up taxes and you don't have as many people wanting to live here anymore, then you could probably see that as a big challenge for housing moving forward too.
Do you see housing as a form of investment or as a necessity?
That's a very interesting question. I think the core of it is shelter, so it's necessary for people to live in. But I think in a country like Australia where people have made so much wealth in real estate, they've unfortunately had to look at real estate as a tool to build their wealth. And so right now, if you're thinking, I'm going to save my money and get to retirement, well, in the circumstances we're in, we can't get there. So we have to look at things or tools like real estate as the vehicle to get us to retirement and to have a self-sustaining retirement, which I think people are going, well, that's more important for me and my family.
Thank you, Ravi. And thank you, Sean, so much for your time on Simplifying Investing.
Thanks for having me.
Thank you.
For more info on Shane and Diana's podcasts and reports, head to the Insights Hub at amp.com.au.